Today's Sunday, May the 3rd, and this is the video for Friday, May the 1st. And you can see, first of all, when we look at FinViz, that on the Dow and the S&P, particularly at the Dow, the volume was pretty low. Everything started with a big drop from yesterday's close and wasn't able to make a recovery by 10:30 in the morning, so it just sort of drifted the rest of the day. A lot of blood in the streets, very little green. Walmart is green. Advancers to decliners. Decliners were better than 4-1, which takes our market oscillator back down to 0. So let's go back to the bigger charts. This is our summation index, which continues to propel higher. Not at all repeating what we saw here. And even back here in 07, 08, 09, maybe what we're seeing is something similar to this little wave here, but that was false hope. Actually, of course, the summation index is predicting what's 3 to 6 months out, so that was correct, but there was a bit of a pullback that coincided with this final drop back down to 6,600 in the Dow Jones Industrial Average, and we still could see that yet. Volume is what talks to me today, or Monday, Friday. And look at the volume was down. We had the lowest overall volume of 3 weeks. Selling was a little bit higher than the previous day, and buying was significantly lower. You can see here. Our oscillator, we said on Thursday, the oscillator right where it was. There could be a turn back up to try to see if we can get a new high, but that's we said on Thursday that's difficult. This many readings above 300 and to get up to around 400 is unusual. We only saw it back in 2018 like this. We had 4 days up there. This time we only had 2. So the most likely path forward on Friday, after having such strong 4 days in the week, was that we were going to pull back, and that's what we did. We didn't go back down to test the neutral line, but what we're looking for now is this low back in April the 3rd, this higher low on April the 21st, and now potentially this higher low on May the 1st. For the bulls to be in charge, we need to not fall below this level here so that we have 1, 2, potentially 3 higher lows. And then we should be good to go and feeling pretty good about things in the future. Let's look at the charts. S&P, there's a couple of things that we need to notice here. One is that on Tuesday, we had rejection by the 200 and the 61.8 X to A. So the S&P had recovered 61.8, the golden ratio number, of this big drop. It recovered to 38.2, and then it pulled back 38.2 of this wave. So look at this. Down, a move up 38.2. Down, a 38.2 loss, and now back up, rejection at the 200 and the 61.8. Let's look for other coincidences, and where do we have one? The flat cloud and the 50%. This is just too juicy. We did finish today right on top of the 50 extended moving average. The 50 simple moving average continues its downward slope and could still be an attractive target for the S&P, but I think that buyers are going to be lined up here to see if they can get support at 50% and the top of the cloud. If not, then at some point next week we're going to come down and test the 50 simple moving average, and we better hope that we can bounce up from that, or we're going down to the 38.2%, making the completion of the bat pattern a little bit more difficult. Volatility Index did move up quite a bit. Apple had this wide-ranging day. Remember, its earnings were Thursday, and it was all over the place with a range of $13, but it finished not at its low, but a little bit off of its low. So take a look at this type of a candle. It's not really an inverse hammer because there's too much of a body here, but it could signal a reverse, but I don't think so. I think Apple is certainly Apple is worth holding on to. Do not sell Apple. But then if you have short calls on your stock, don't sell those either. 61.8 is the 8 EMA, so we could see a test there. Now this gap has been filled. We can get rid of that. Home Depot finished on a positive note. Actually, no, it finished down, but it did move up from its open, but it finished lower than the previous day. It has finished the first target of its bat pattern. Caterpillar, really hurting. So my short 120 calls, which were looking not so good up here, are looking pretty darn good down here, and I'm happy with them. At some point, I'd like to see us get down to the top of the cloud and get support. But look at the Chiku span. This is a daily. The Chiku span is going to open on Monday, right at the top of this candle. So that is going to be something that we need to look for. And let's put that mark right there so that we can remember it on Monday afternoon and see if that did prove to be an important point for us. Google, that's what Google looks like, flat cloud. Nvidia, what a walloping Nvidia took on Friday. So now the contracts that I have, 290 and 300, which are June, are losing money, but I'm still sticking. I'm ready to lose $500 on that before calling it quits. Smile Direct Club, Whirlpool, this is a 15-minute. Let's look at the 1 day. Support on the 50 extended moving average, and then finished above the cloud just below the 50%. So technical traders are signaling here that the moving averages are important tests for support. Shopify, GDX, still not showing that much life. Facebook, Netflix, looking a lot. They're all looking about the same, right? They all finished off of their lows, but all towards the bottom of the daily range. Now let's take a look at a new stock called Nordic Tanker that Andy said he was taking a look at because he thinks that the tankers are going to become a prized commodity with this glut of oil. There's no place to store oil on land anymore. The reserve tanks are all full. So as long as we continue to produce oil, but there's not the same consumption demand, then you've got to have a place to store it, and tankers are where they store it. So I took a look at two things. One is a term called Contango. You heard this term some years ago. Well, it's back again, and that's a situation where the futures price of the commodity is higher than the spot price. So they're buying today's oil, putting it in a ship so that they can sell it in the next contract. But what happened this time is the buyers of these of oil got caught, and come expiration, there was nobody to buy their oil, so they had to roll it into the next month. So let's go and look at Nordic Tanker. There was some news on Nordic Tanker, so I would suggest that you take a look, do a search before you get into Nordic Tanker. Here's an article on the Motley Fool that talks about additional tanker capacity and fuel storage. So I'm not ready to jump and say that this is something we want to look at. The Motley Fool, whether you believe them or not, said this is actually worse news for oil shipping stocks. And look at what happened here. The volume was particularly low. Now, Nat pays a 14-cent dividend. It used to be one of Jim Cramer's big dividend security stocks, and then it just got hammered, and he stopped talking about it, but that was years ago. It was really a favorite of Cramer's. But let's take a look at what this stock was doing at one time. When it was up here, it was real popular and was paying a huge dividend. As the stock just crapped out and Nat found itself with too much shipping capacity, they lowered their dividend. They were caught under the 200 moving average for a long time, and they just broke out. Well, they broke out over here in 2019, came back to test the top of the cloud. They moved higher. This cloud says that maybe it's going higher, but look at the range. Nat didn't finish at the top of its range this week. It finished at the bottom. So if this is a stock that you want to buy, you've got to do two things. You've got to keep your eye on the Contango, the difference between the current month's oil target, oil futures, and the following month's oil futures. But you want to wait until you see a new high. So you would not do anything, in my mind, until you got above this value. And then only then would you start to nibble. That's all for today. I believe on Monday or Tuesday we'll see a slight rebound, but I believe the thing to watch for next week is this, what I think is an inevitable pullback to just under 2,800, where we at least touch the 50% and the top of the cloud, and then possibly have a bounce back. But the Chiku span has really no support anywhere until the 38.2 in here. So this is going to be a critical test right here at the 50. 2,800 is a critical test for the S&P.